4 reasons we choose buy and hold real estate. My name is Adam Johnson and I'm the president of Johnson Property Investments. Today I'm going to share with you the 4 benefits of buying and holding rental real estate. So stay tuned.
Hey guys, so I'm talking about the 4 benefits of owning rental real estate. Real quickly, the most important of all of them is passive income. Money coming in from rent without you having to work for it. Secondly, you have a mortgage balance pay down. Your tenant is paying down your mortgage per se, it's not you. And in the third part, you have appreciation of the home, the asset. As you own it, it continues to grow up and to go up in value. And then lastly, the fourth is that real estate offers many tax write-offs. Very beneficial when you start making a decent amount of money. You need tax write-offs to be able to shield some of that money from paying all that to the government. So really quickly, the breakdown I have right here is one rental property with basic numbers. Okay, your numbers are going to be different based on interest rates, based on many factors. So don't get wrapped around the wheel about so many small details. Okay, these are just general rules of thumb. So when we buy a house, I look for a house that will provide us about $300 a month of passive income. That equals out to be $3,600 per year. So here's how it breaks down. Year one, house one, we make $3,600 per year. The mortgage balance, I buy this house for $180,000, okay? The home is worth about $200,000. Over here for equity, I have 0. And you may say, well, if the house is worth $200,000, but you only owe $180,000, that's $20,000. No, it isn't, because 99.9% of the time, the seller pays the closing cost, which is 3% for the buying realtor, 3% for your realtor, and then 3.5% to 4% for closing fees, docs, so on and so forth, okay? So when I do my math, I take out that 10% off the top. That way I don't have a phantom number thinking I'm gonna make more money with the sale, okay? And then as I said before, the tax write-offs, the government calls it depreciation. Your CPA can better explain to you what depreciation is. In a nutshell, the government says your house is worth X. We'll take that number, in my case, $180,000. We'll subtract the cost of the land, which is give or take $20,000. So now I have a structure worth $160,000. They'll take that 160, divide that over 27.5 years, give me that amount as depreciation. All right. Again, your CPA can better explain that. So real quickly, how I'm going to run through this. So with passive income, what we do typically is we raise our rents about 2% each year. Doesn't sound like a lot, but when you have 5, 10, 20 houses, it definitely adds up. So if the first year I'm making $3,600, next year a little bit more, you can see by year 10, that $3,600 turned into $4,302, okay? Again, but that's a good little amount of money for you not working for, okay? Now, as I said before, while I own the property, the tenant is paying that mortgage down for me. So that's a powerful thing. So you look at this house when I bought it for $180, now it's worth about $164 after 10 years. It's actually going to be more than that, but for the sake of basic math, I took off 1% each year compounding. Again, stay with me for easy numbers. Now, appreciation. Generally speaking, depending on where you look, the national average is about 3.5% to 5% of appreciation, meaning each year your home goes up in value 3.5% to 5%. I did a very low conservative estimate. I used 2.5% of appreciation, just to show you still, even with a smaller number, how powerful the compounding of the appreciation is. So year one, the home is worth about $200,000. You can see it goes to year 3, $210,000, so on and so forth, down to year 10 is approximately worth $249,772. Again, this is not you working for this money. This is you simply managing, maintaining, and receiving a rental check each month. Now, equity, as I said before, the way I run my numbers is I take off the 10% off the top, so I don't have bad numbers when I'm doing my assessments. So this house we've held for 10 years. We've done nothing but have a good tenant. We've maintained the home. We've answered a few phone calls here and there, and now we have about $60,000 of equity after we cash out everybody else. That's powerful. Okay, so that's one house. You're not going to get rich off one house, but let's just compound it. Let's say you have 10 houses. Okay, and let me just say that while it's not easy, real estate investing is not easy, it's very doable. You buying 10 houses is not out of the realm of possibility. I think we bought 7 houses in 1 month, and we bought 10 houses in a matter of like 2.5 months before. They just come. They come and go. Sometimes you'll get a batch of a lot of houses. So, but you have to be available. You have to know what you're looking for, and have to know how to monetize those leads. We'll get to that later on. So, same math. I own 10 houses right now. I own 10 houses. You can see I'm now making $43,000 per year passive income. I now have $603,000 of potential positive equity. All right. Let's just keep on pushing this down. You can see what it's like if you own 30 houses, 40 houses, or more. I'm gonna do 30 for the math I did up to 30. So you own 10 houses, you're making $86,000 a year. You own 30 houses. You are passively making $129,000 per year, sitting on your butt, taking a few phone calls, hiring maintenance crews to do certain things here and there. The compounding effect of real estate you're looking at right here. These are not my numbers. Our numbers are a little bit different, but I want to show you for simplicity how they work. So 30 houses, 10 years, I'm making $129,000 per year passively. I now have $1.8 million of potential equity that I could sell the houses for, pay off everybody that the realtors, closing fees. There will be some deductions for taxes. Again, your CPA can tell you more about that, about a 1031 exchange. It's not for this video, but you can see what real estate can do for you, why I am so passionate about helping people get into real estate, helping them understand real estate, and helping them learn how to look for the deals, identify win-win situations, and genuinely want to help people do better. So this little Excel spreadsheet is going to be downloadable. Leave me a comment below. I'll get that to you shortly. Until then, I'm gonna get you back to the video. All right, later, guys.
Those are the 4 reasons we choose to invest in buy and hold rental properties. Please leave us a comment below. Let us know what are some of the reasons you want to invest in real estate. Don't forget to like, share, and subscribe to our channel. See you guys later.